Hi everyone, my name is Pai. I'm the CIO at SEB 10X. This year, stablecoins have moved quickly from innovation topic to boardroom discussions. But the real question now is what it takes to move from strategy to production, where payment flow needs to be reliable, compliant, and trusted at scale. To explore that, I'm very pleased to welcome Bob O'Brien, Senior Director, Go-to-Market Crypto Solutions at Visa. Hi, Bob. Thank you for joining us.
Great. Thanks for having me.
So, Bob, you sit at the intersection of Visa Global Payment Network and the fast-evolving stablecoin ecosystem. Could you share a bit about your background, your current role at Visa, and how your experience shapes the way you think about stablecoins in real-world payments?
Sure. So background is I lead Visa's global go-to-market strategy for crypto solutions for global banks, super regionals, credit unions, and community banks. Prior to this, I ran go-to-market at Axlar, which was an interoperability firm. We sold the company to Circle, and then CEO of Uphold Institutional, and then prior to that, about 15 plus years in traditional finance. So and through this whole journey, the reason why I came into the crypto market was basically I understood that blockchain technology was something that was going to definitely change from the standpoint of potentially like a stable coin that could work across global environment, and something would be kind of more of a general way that things would settle and things would move. So it took a little bit of a couple years longer for traditional finance to get back into this business, but it now seems to be embraced globally from that standpoint. And then obviously now with the new administration here in the US, moving very, very quickly into trying to become a leader in crypto, stablecoins, and basically rewriting the whole system for global payments, cross-border, B2C, and P2P.
I see. I think that's a great journey for you, starting from Web3, bridging with Axla, and then now moving into help rolling out stablecoin strategy at Visa. So let's start with the market narrative. Faster payments, cheaper settlement, 24/7 money movement. I think those are important, but the enterprise story is more nuanced. And a year ago, many enterprise teams were still treating stablecoins as something to monitor. What changed? What moved stablecoins from innovation side topic to a real payments priority?
Yeah, I think that is the biggest question that's out there, and I think it's a great question to start with. So I think what's going on, if you look at the way that the banking systems work for the last 100 years here, it's been this slow moving process, either using Swift, Fedwire, or the other systems in the US, RTP. Everything is siloed. None of it is global. It's super choppy. In some situations, RTP, which is supposed to be this new great settlement layer, I think at some countries, the maximum amount that can be moved through RTP is $500. Europeans have their own system, but it's only within Euro, so it's not global. So all these kind of traditional systems were only situated around banking hours. The patches that were put on were basically put on through basically to just kind of silo in general with just different states or different countries. Nothing was kind of global. So I think what happened is client demand has pulled stablecoins out of basically the crypto ecosystem. So client demand is basically what's driving stuff from our perspective. And what a client wants is 24/7 access with a global reach, always available settlement economy, instant money movement, and a digital experience, right? And if that's what you want, the only real answer is stable coins, right? you can't really do it using these patches or Swift or these other things. So, I mean, it's kind of silly these days to be basically constrained to banking hours or anything else that's around traditional banking. So, and then obviously the other benefits would be frictionless, low cost. It would be a system where you could basically KYB and KYC, so nefarious characters basically can't would be recognized and noticed, and the funds can be frozen. So basically, it's been what we've seen from our standpoint. It's a client demand pull, as you can imagine here in the States. It's not a push from the likes of the global banks, but it's really been a pull.
Mm. So it sounds like the demand for 24/7 is real, and that there's still like a big gap with today's infrastructure. And I believe the fact that Visa is engaging across now like card settlements and also tokenized bank assets and also advisory shows that this is not a single product question and more an ecosystem and operating model question. Now I want to dig into what rollout actually requires. A lot of companies start by asking like who are the right partners, the issuer, the wallet layer, the infrastructure provider. But once rollout gets real, what do they realize that they should have been asking instead?
Yeah, that's another great question. We get it all the time from that perspective because no one knows where to start. The quickest and best way to start is start with a digital wallet, right? Digital wallets they basically are the way that you start your journey. And remember, a digital wallet, which a lot of people get confused here in the States, can't hold fiat. It holds digital assets, right? So if you start with a digital wallet and then you move funds from fiat into the digital wallet, then you basically start with understanding the ecosystem. And then from there, you can evaluate kind of use cases, whether it be cross-border, whether it be pay-ins and payouts, whether it be from a Visa standpoint, when there's 7-day settlement, collateral reduction, and things along those lines. So the wallet is the base strategy of where you start. Then the arc would be like a phase two, which would be start to enable this wallet for acceptance of stable coins, right? Establish a wallet, be able to choose which stable coin you want. And I think we're going to get into that a little bit later. I can discuss how that kind of works. And then I think the first thing that we're seeing here in the States is the question is, where do I start? Okay, get a wallet. And second of all, how do I tell my clients or how do I start accepting stable coins as a payment? So with Visa can help from that perspective with the wallet generation and also helps with pay-ins. So basically from that perspective, now you've started where you can open your ecosystem that your clients can accept stable coins as a payment. Visa can do the fiat on off for that through our Visa Direct product. And that's where the first two steps. The third one I would say is adoption. So once you've got the wallet created, once you've got the the ability to accept stable coins and the chosen stable coin, now you can look at cross-border, you can look at remittances, you can look at B2B payments. And then if you want to get a little bit crazy, you can look at online lending, which is a big business, which is through DeFi. I don't think these guys want to go in DeFi right away, but it is something that's readily available and growing. And then you kind of, from there, as the fourth phase would be to just basically expand your network, right? So now you're going through full stablecoin settlement, say issuer and acquirer, hopefully all the way to merchant. And Visa has its fastest growing product, which would be a stablecoin linked card. So if your clients have a digital account, they have a digital wallet. Now they have the ultimate off ramp, which is basically to use a Visa stablecoin linked card. Stablecoin linked cards are very fintech heavy right now, not as much bank heavy. As you can imagine, if you have an account at crypto.com, which Visa powers the card there, we just in Asia, we now have the OKX card. Through your account, you can swipe, tap, or pay at any vendor anywhere the Visa is accepted. The merchant gets paid in local fiat, and stablecoins and or crypto is decremented from your account. So there's a seamless experience, works exactly the way a regular card would work, but it gives you that off ramp off that digital wallet. So those 4 phases are basically the way to start. Build the strategy through the digital wallet, enable stablecoin acceptance, and then create adoption, and then expand the network out.
I think that's interesting phase that you mentioned, and I feel like I think it also maybe depends on the type of enterprise that you work with. Because I'm also curious, like we are from banking group, and then we often start with I believe it's phase 3 with the adoption, where we run the exercise of where the use case could come from before even thinking about creating the wallet. So I think that's kind of interesting phase that you mentioned, that it should actually start from thinking about digital wallet capability, and then think about with stablecoin, and then see the use case. Do you see the phase different in each type of clients that you work with?
I do see the clients jump ahead, but we caution them to basically not jump ahead and basically start with a well thought out strategy from the perspective of understanding the ecosystem and then how it works, right? We also have a Visa here. We have VCA, which is our basically in-house McKinsey. And we have about 90 programs working with global banking or fintech clients to understand exactly how to run the strategy. And what they do is they basically do everything from Stablecoin 101 to go-to-market strategies to board slides and everything like that. But I would caution people from basically just jumping in and going, okay, cross-border is what we're going to do, da-da-da. You really have to understand how digital wallets work. You have to evaluate your use case, and you have to see what your clients need to do. If your clients mostly are going to do pay-ins, and it's a stablecoin sandwich from that perspective, then you really have to start with the strategy first. I would build it from strategy first before jumping into other things.
I see. That makes sense. And in payments, I think something can be technically possible, but still not operationally dependable. So when you speak with enterprise, where do you see them confusing stablecoin capability with stablecoin readiness?
Yeah, there is a long time between capability and readiness from that standpoint, but I think it's converging faster. When you think about what's going on here in the States, you've got 2 massive pieces of legislation that were passed in the last year. Even the Genius Act that was passed last fall, and now you have the Clarity Act, which has basically been agreed upon to about 99% of the points, and then they're just dotting the I's and crossing the T's. And then you have an executive order that keeps coming out. They keep issuing new executive orders. And the last one was last week, that they want financial institutions to embrace digital assets for cross-border payments and B2C payments. So from that standpoint, when I speak to most institutions, the toothpaste is already out of the tube. So if you don't have, if you're not thinking about it from a digital adoption perspective, and you're not thinking about it from where I am in the ecosystem, you're going to fall behind. What we see from Visa's standpoint is most people don't switch banks for just no reason at all, but they will switch banks for services that end up being modern services. So 24/7 banking, global banking. And we are working with people with pilot programs along these lines. So it's something that I think institutions have to move to the forefront. VCA can help if you are still struggling a little bit. We find that the hardest thing is the board presentations and the board slides. So we get a random CEO that loves it. We have a bunch of people that work in whatever department love it, but now you've got to present it to the board and get the board to sign off on that. Okay, we're going to start doing stablecoin settlement. We're going to start doing stablecoin cards. We're going to issue digital wallets and everything else. So But like I said before, the toothpaste is out of the tube. So if you don't start doing it from that perspective, you're going to fall behind, and then eventually you'll lose depositors. People will go to the bank across the street for the fact that that they have a digital strategy and modern banking.
Mhm. I see. Yeah, I think with the clarity, like the regulatory clarity is, I hope it helps a lot with the boardroom discussion, but I'm sure that Visa can also like maybe see more and help in this direction. A company, and I believe a company can have the right thesis, the right partners, and the right executive sponsorship, but production flows can expose everything that has not been operationalized. So when a company tries to launch a real stablecoin payment flow, where does the first serious friction usually shows up based on your experience? Is it like in liquidity management, reconciliation, or counterparty readiness, or something else entirely?
Yeah, so I think one of the biggest things that the mistakes that people make in this business is that each stable coin is the same or each digital ledger is the same. So I just did a presentation yesterday to a large global bank here in the States, and you have to understand that when you're dealing with different tokens, excuse me, you're dealing with different ledgers, right? So in other words, you have a Solana ledger, you have an Ethereum ledger, and a lot of times they don't talk to each other. You have to be able to bridge that technology. So when you're choosing a token or you're choosing a stable coin to go with, then as you mentioned, liquidity would be the number one factor. You have to choose a stable coin that is liquid enough that it's accepted by merchants, right? That's the number one. Let's say that's tied with compliance. From Visa's perspective, we use Circle products, and then we use PYUSD, but predominantly our flows are on USDC, and it has the reason being is that it is compliant, it's Genius Act compliant, and from the standpoint of Visa systems, it checks off all the boxes. So number one A and one B are liquidity and their compliance. So think about that from that perspective, because once this banking system opens up, it money can move freely, but it still has to. If it moved nefariously, let's say 2 hops before the token got to your client, that's still a bad thing. You can't have that, right? So you have to
Mhm.
have a token that's out there monitoring every debit and credit that goes through the ledger to make sure that it's not it hasn't gone through a mixer, or it hasn't gone through a nefarious wallet, and that all that has to be monitored. So you also want to make sure that the let's say we chose Circle, that Circle is monitoring its ledger. So every time a transaction goes through, a debit and credit goes through, it will have assumed that it has gone through a compliance check. And both wallets are clear and they're compliant from a KYB, KYC perspective, and then they can move on with the transaction. So you've got to keep that top of mind. So also from that standpoint, so USDT is one that we probably will not be able to accept. It's not MiCA compliant from Europe. The attestation of assets has not been proven. So from those perspective, I don't know if USDT will make it through the compliance check here. But we are at Visa, we are stablecoin agnostic. So we are willing to add stablecoins, and and I think that's important to do, but it has to pass all those checks because, as you can imagine, um, just to give you the scale of what Visa does on a yearly basis, through our normal payment rails, we process 30 trillion transactions a year. So getting a stable coin or going through this digital asset experience without something that's compliant when you're going to push that kind of size through potentially, or that kind of liquidity, it has to not break. It just if it does, it's just a non it's potentially, if it's even a thought that it might break, it's a non-starter. So So I think those are the things you have to kind of start from the beginning. And like I said, we choose USDC to start, but we are stablecoin agnostic.
Mm, got it. Okay. So I agree with you that the liquidity and the compliance are critical in this adoption. And some enterprise assume stablecoins are just another settlement rail that can be inserted into any existing payment stack without changing much about it. I think you touch on a bit in terms of the KYC, KYB, but where does that assumption hold and where does it break? What parts of the existing stack typically have to adapt around a stablecoin flow?
Yeah, I mean, it it has to survive the stress test of potentially 30 trillion payments going through. So maybe it would probably be good to me to explain kind of where Visa stands from a standpoint of basically our on-chain thoughts. So Visa believes that all banks will be on chain. Okay, so we are at some point in time. So we're looking at the future and we're saying, okay, all banks are going to be on chain. Reason being is it's low friction, it's KYB, KYC, it's instantaneous payments, and all the reasons why stablecoins are the or a digital asset kind of experience like this is the right way to go. We believe it improves treasury flow and payments flow. Visa is at this point allowed to, or its technology can push to accounts, push to cards, and push to digital wallet. So from that standpoint, we also believe that everyone basically is going to have a digital wallet at some point, right? Visa does not see on chain as replacing replacing rails. It's basically, we believe that it's basically taking the current system and just making it better, right? It's adding a new settlement and liquidity to an already existing system, basically creating that modern bank or that kind of 24/7 off hour experience. We have tons of clients that we talk to that are US based treasury. They have an APAC customer that might have a factory and they need the money sent there real time. And then they need also if the client doesn't have a digital wallet, Visa can flip it into fiat for them, if in the same way that we do with any transaction. But these kind of payments are going to be demanded from the customer. They're going to pull clients into it. So we believe these rails are basically an improvement to the system, and it already plugs into an existing system. So for us, it's stablecoins are basically tokenized dollars moving throughout the system, right? And the goal being to modernize settlement and cross-border movement. So from Visa's perspective, we see an entire shift in the way things are moving globally from the banking sector and from the ultimately the merchant and the acquirer. So everything is going to be on chain, everything's going to be improved, and doing your stablecoin strategy and thinking through the process is basically the way we believe that everyone should be doing it right now.
Mm, I kind of agree with you, and I think maybe some could underestimate that, they don't have to change anything, but it sounds like they need to have more in terms of to make it operationally feasible. Like they actually need to build a complete flow with this stablecoin rail. And also, I think you mentioned that you believe that everyone is going to have a wallet, and with the Visa tokenized asset platform or VTAP, I believe banks can begin experimenting with their own fiat-backed tokens and programmable money. So, how should enterprise think about the difference between using public stablecoins today and preparing for a world where banks may issue more tokenized deposits or fiat-backed tokens themselves?
Yeah, deal with that question a lot because in the States here, there are banks that want to basically use tokenized deposits. I think it's public. HSBC has tokenized deposits even through their New York branch globally. Chase has their own private token. Citibank has their own private token, Citibank Token Services, and they're able to move money throughout the walled garden. So the difference being is that if you're a Citibank client in Singapore or Thailand, and then you need to send money to the States, it can be done seamlessly and in seconds through tokens internally within these walled gardens.
Mm-hmm.
So I think when you think about that, you have to think about, oh, that's great, but what if Bank A needs to go to Bank B? It's not possible for a tokenized deposit from Bank A to sit in Bank B. It's not. It's Bank B won't allow it. First of all, there's no bridge between the two. Okay, so there's no way that Bank A's token can sit in a wallet for Bob O'Brien at Bank B. If Pi sends $100 in a token to Bob from Bank A to Bank B and sends Bank A tokens, Bank B is going to be like, I don't know Pi. I
Mm-hmm.
don't know this. Has she been KYC, KYB'd? I don't know. So I'm going to reject it. So when you think about tokenized deposits, you think about stable coins. We talked a little bit about it earlier. You basically choose it from the interoperability perspective, right? So all these guys are focusing on tokenized deposits, but no one's focusing on interoperability. So it's great that you're tokenized your deposit because now you've got tokenized asset that you can perspective, but ultimately A has to get to B, right?
Mm-hmm.
The easiest way for A to get to B at this point is we do 30 trillion in clearance. So Visa ultimately can be that rail that can go across. So that is still in the early processes through Visa Stablecoin platform, which VTAP has been renamed Visa Stablecoin platform. So eventually we're going to get there. Visa Stablecoin platform is still in beta, but if our ability to clear and settle are basically the way that we think that we can create interoperability and create liquidity and flow within the system. So from that standpoint, when people think about tokenized deposits, and I love that, or they think about stable coins, it goes back to the point that we made before, which was like, okay, so we need to understand liquidity, we need to understand compliance, and we need to understand how it gets out of our system and goes into the global system. Not everyone banks at the top 5 banks, right? They just don't. So some people prefer other places. So tokens are going to have to get from one to the other. So when you think about that strategy, think about that process.
Mm-hmm. Yeah, I agree with you that so it's more walled garden within each bank, but if you think about interoperable, you should think about public blockchain. And I think it's interesting that Visa can play that role in helping across banks. So we probably have time for one more question, Rob. Over the next 12 months, what would convince you that stablecoins are no longer just um, being tested by enterprise, but are starting to become part of real payment infrastructure?
Yeah. So I think a couple of hops. I think we didn't talk about a little bit about the kind of mental model that's going on now. There's still a fair amount of people out there that think stable coins are crypto. They are not Bitcoin. They're not Ethereum. They are digital dollars. So from that standpoint, it becomes a mindset change. And then what we're seeing at Visa here is we're seeing more and more, and this happens kind of it basically gets better every month. So we see when you look at the mint and burn from like a Circle or some of these other companies, you actually see that their mint and burn is positive, meaning there's more digital assets in the system, so digital
Mm-hmm.
dollars in the system, which means people are getting more and more comfortable with holding digital assets in a wallet, right? So if the pluses outweigh the minuses, means there's more wallet creation, there's more people that hold something like that. So from the standpoint of a mental model, it's okay. Number one is people have to get more comfortable that I'm fine with digital assets sitting in my bank account. still a lot of people out there that think it's crypto and flip it right away into fiat. So from that standpoint, if as that continues to grow, you would think that 12 months from now, it would be even a higher optimization as far as wallet creation and mint exceeding burn, right? And then it's also global adoption. I think you're going to find as the U.S. keeps pushing super hard on digital rails and digital adoption of stablecoins. I think it's inevitable. We talked about that use case earlier, where Treasury in the U.S. wants to send money to APAC for goods and services, and they want to do it through stablecoin wallets. I think what's going to happen eventually is this merchant over here in Asia is going to get a digital wallet, right? And once they get a digital wallet, then the thing just basically seamlessly goes straight across, right? Low fees, gets complete deposit in there within seconds, the same way it does within a walled garden, but this is outside the walled garden. And Visa can help from that perspective move the stable coins along the different rails. Our rails are built for both traditional 75-year-old Visa systems, and now they're built for stablecoin settlement across the entire network that goes from issuer to acquirer to merchant. So I think as we just continue to see adoption from that standpoint, I think that would be a positive for 12 months from now. I also think one of these large global banks or super regionals within the US is going to basically jump in with both feet. And from a tech perspective, being like, okay, I'm going to be the first guy, and I think I can steal deposits from the bank across the street by doing this and offering these services to my clients. So I think you're in the process of seeing that as well. I think that you're going to see people that see this as, if you run a bank, at least, obviously I'm very pro digital assets, but if I was running a bank and I was, let's say, looking at the big majors and I was like, okay, how do I steal deposits from those guys? I would be like, all right, I want to be the first guy to adopt a stablecoin settlement system that goes across rails and it's global. So I can pay any client in the world instantaneously at a low fee. I don't have to deal with any of these Swifts or any of these other systems out there. And if they need to be paid on the weekend, great, I'll pay them on the weekend. So I think that you're going to see all that in the next 12 months. And then from a legislative perspective, we'll probably pass the Clarity Act at some point this year. And then if we keep getting these executive orders, I think that global banks just can't hide anymore. They just have to do the work. So I think all that happens within the next 12 months.
Thank you so much, Bob. I think we run out of time, but this has been a very useful conversation, and thank you so much for your perspective on the realities of the stablecoin rollout. And thank you everyone for being here.
Sure, happy to help. Thanks, Pi. Enjoyed it. And I don't know next time I'll be in Asia, but I was at Thailand Money 2020, so I'll probably be there again next year. So maybe I can speak at one of the events there.
Sounds great.
Thanks, everyone.